Thanks for joining us on Lunch. This is Bloomberg Quint. I'm Harsha Subramaniam.
Good afternoon. I'm Ira Dugal. Let's get you the headlines. Indian markets oscillate between gains and losses after posting the worst two-week decline since February.
The rupee recovers after setting a new low in opening trade to hover around 72.80 to the dollar.
The cabinet approves the new procurement policy for farmers.
China seeks WTO backing to levy duties on U.S. imports worth $7 billion.
All right, all that coming up, plus a mood check from the ICICI AGM. But first, let's start with the markets flat right now. Neeraj is here with the afternoon check. Neeraj.
Hey guys, good afternoon. So, well, doing okay. The bank nifty is not, but the others are. And that's primarily because of the tug of war between what banks are doing today. And private banks have corrected from a yes to an ICICI to the others. Since the morning, they have been down and they continue to head lower. So bank nifty is the spot of bother, if you will. And correcting a little bit, offset by what's happening to some of the defensive names today. So HUL and ITC, from the start of the trading day today, have done reasonably okay for themselves and are holding out. IT has not had a bad day too. No big gains, but IT stocks by and large seem to be doing okay for themselves. So not a bad start to those names as well. A clutch of newsmakers, and if you just sort the BSE 500 by the gainers and the losers, the gains out there are a lot more pronounced than what we've seen in the past two trading sessions, because remember, the market breadth in the previous two trading sessions were very adverse. In today's session, it's not as bad. Remember, yesterday 3:1 in favor of the declines. Day before yesterday, about 4:1 in favor of the declines. In today's session, while adverse, not as bad. And one is hoping that the kind of selling guys that we saw in the last few days, last 3 days to be precise, in the last 1.5 hours of trading, does not come in today's session as well. So that's something you are hoping to happen in the session today. But essentially a defensive day, some defensive names doing okay, banks under a bit of pressure.
All right, Neeraj, thanks so much. Just going to flag off what's happening in the money markets as well, both the currency and the bond markets. The rupee is trading at 72.80 to the dollar. You had dipped as low as 72.91. Then you saw a little bit of a recovery coming in. We continue to point out what we have been since yesterday, that the latest leg of fall is different from what we had seen earlier. You've depreciated more than 5% in the last month. If you actually look at just a 5-day period, the rupee is actually done far worse than the Turkish lira, which of course is where the problem had started. Also pointed out to us by Anant Narayan, veteran of the money markets, is what's happening in the NDF markets now. So if you pull up what is the 1-month NDF points, which market participants tend to track to gauge what the sentiment is in the offshore market, those have spiked over the last month, again suggesting that the latest leg of fall in the rupee is more sentiment driven, which is leading to more outflows and then hence leading to pressure continuing on the Indian rupee. Of course, all of this is filtering through into the bond markets, and perhaps the central bank will be a little bit more worried about that than just pure currency, because at 8.22 on the Indian 10-year bond yield, you've gone from about 770 levels to 820 levels very, very rapidly, and the market is now sitting on an expectation of perhaps 3 more rate hikes in this fiscal.
All right, a depreciating rupee, rising oil prices have prompted foreign investors to rejig their investment portfolio in India, with export-driven sectors understandably attracting more investments. That's fortnightly data released by NSDL shows that there was also a net outflow of about $142 million just in the last 2 weeks of August alone. Yatin is here to take us through some of these details and the overall trend that's taking place.
Well, Harsha, that's right. And the currency movement that have come in globally in the last 15-20 days, a lot of foreign institutional investors have been shifting their money towards various sectors. Now, the data is quite interesting. So let me talk about the entire August month flow. We have utility, pharmaceuticals, capital goods and textiles being the top, favorable sectors wherein we have seen a positive inflow. Of course, software has seen some, decline in investments. The net outflow from the software sector was nearly $100 million in the month of August. But look at the period from 16th of August to 31st of August, wherein we saw bulk of that currency volatility come in. We saw a positive flow of $40 million for the software sector. So For the start of August, probably there was some selling in software, but that probably reversed in the second half of August. Similar is the case with pharmaceuticals, wherein we saw a net inflow of $136 million for the month and the period of 16 August to 31st August. And also, if you look at the textile sector, which is positively impacted because of the depreciating rupee, that saw $42 million net inflow. So, of course, healthcare also is one sector wherein we saw some positive inflow coming in. So from textiles to software to healthcare, which positively gets impacted because of the depreciating rupee, saw some positive inflow. Of course, what did not do well is the financial services sector, wherein we saw nearly $200 million outflow coming in for the month of August. Oil and gas also, we saw almost $150 million money move out. The anticipation in the market was that the oil marketing companies would get impacted if at all there is some pressure from the government to keep prices in control. And media and construction also, the two sectors wherein we saw outflow irrespective of the currency movement.
All right, Yatin, thanks so much for that. The other story which is continuing is the story building out at the IL&FS group, which has run into trouble for not honoring its repayments to SIDBI. It looks like they may default on yet another tranche. Bloomberg News, Saloni Shukla joins us here for more on that story. So, Saloni, what have you picked up?
Nothing to cheer as far as IL&FS is concerned. From August 27th last month, we have seen trouble brewing for the group, and it's coming to forefront. Now, what we have picked up is that it has defaulted on another 100 crore of payments on intercorporate deposits which SIDBI had parked with the IL&FS group. Now SIDBI has gone ahead and asked IL&FS to submit a repayment plan as soon as the next 10 days, failing which it will take further action against the group. Remember, there is a 500 crore of ICDs which SIDBI had parked with IL&FS, out of which it has already defaulted on 300 crore of ICDs, and 50 crore has been the repayment so far. There's another 150 crore which is coming for repayment on 14th of September. On 15th of September, the IL&FS Group board is meeting to consider the asset monetization plan. We'll have to wait and watch as to how much is the credit line and the rights issue that they managed to get from its stakeholders. But clearly a default continuing as far as IL&FS is concerned.
Saloni, thank you so much for that. That's IL&FS. ICICI Bank MD and CEO Chanda Kochhar has decided to stay away from the bank's AGM being held in Vadodara today. Vishwanath Nair, who is attending the AGM now, joins us from outside the venue for more. It was really not expected, was it, Vishy?
Wasn't expected. Actually, apart from Chanda Kochhar's absence, there's also MD Malia and Lok Ranjan Mishra, the government nominee Lok Ranjan Mishra, who are both absent from the board meeting, which the shareholders were clear to point out. One point that needs to be mentioned is that right at the beginning of the AGM, some of the shareholders had raised some slogans against the alleged corruption at ICICI Bank, as well as the absence of Chanda Kochhar. The shareholder who raised the slogan had called for Chanda Kochhar to be present at the AGM to answer all shareholder queries. In their statements, multiple shareholders have raised the recent issue with the Videocon case, and they have all pointed out that there is a clear case of lack of governance at the bank, and that the bank is answerable to its shareholders. The shareholders also pointed out that the SEC investigation or the queries from the SEC that have reached the bank are also a matter of concern, and that they are sure that the SEC will be levying some kind of fine on ICICI Bank. So who exactly pays for these sort of issues? That is a question that the shareholders have raised at this AGM.
Vishnath, as you're talking, we're putting out some of the individual shareholder comments that you've been sending us from there. But what would you say is the mood? One can pick up on individual comments, but do you sense a general, mood of discontent among the shareholders around these issues? Is that the underlying or the overarching theme at the AGM today?
So far, about 7 or 8 shareholders have already spoken, have made their statements, and a majority of them showed their discontent with the way the bank dealt with the ICICI Bank Videocon loan issue. In fact, one of the shareholders had pointed out that the board, in its initial response to this case, had decided to back the CEO. And he pointed out that the board went with its approval within 15 minutes of the issue being brought to its notice. And on what basis the board actually decided to back the CEO, considering that in the subsequent days there was an investigation that was initiated, the Sri Krishna committee that was formed to investigate the matter. They said that if there was a need for such an investigation, that should have come up at the first meeting itself, rather than the board, changing its stance later on. That showed sort of some kind of problem in the way the board dealt with the issue. So clearly there is some level of discontent amongst the shareholders. Some of the shareholders still pointing out some of the positive points with the bank, but the majority of them clearly pointing at issues.
All right, Vishwanath Nair, thanks so much for that. That's Vishwanath reporting live from the ICICI AGM. A common online platform to auction seized properties from defaulters is in the making. The government has advised banks to start work on an e-auction website in a bid to increase recoveries. Nikunj Ori joins us with the details of the plan. Nikunj.
The government has advised public sector banks to create a common platform for auctioning of seized properties of defaulters by lenders. A common platform, according to the government, will have standardized details of auctionable properties and will increase transparency in the entire process and will invite competitive bids. Competitive bids in turn would increase recoveries for public sector banks. This initiative is being steered by public sector banks in consultation with Indian Banks Association. According to the government, the current process where details of auctionable properties are posted on respective websites of public sector banks is very inconvenient for bidders, since they have to go through multiple websites for bidding for any of these properties. A common platform would be more convenient for bidders and will enlarge the bidder base for these auctionable properties. The new platform is expected to be ready in 2 to 3 months, according to Financial Services Secretary Mr. Rajiv Kumar. Over to you.
Nikunj, thank you. In an effort to attract more bidders, the government may revamp its coal mine auction rules. The committee chaired by former Central Vigilance Commissioner Pratyush Sinha has made recommendations that await approval. Bhanvi Arora brings us the details.
The government is in the process of finalizing revamped rules for coal auctions. Now the coal ministry is framing these new rules because they had received a tepid response in the auctions conducted earlier. To frame these rules, a high-powered committee was formed, which was headed by former Central Vigilance Commissioner Pratyush Sinha. Now, under these new rules, government will consider reducing the number of bidders in the auction. They are also going to lower the upfront payment needed for the auctions. Apart from this, they are going to reduce the quantum of bank guarantee for the bidders. Some of the new coal norms will need cabinet approval. Now, the first stage of the report framed by the high-powered committee has got cabinet secretary's approval, and the minister's approval is left. The government will hold fresh coal auctions based on these new norms this fiscal year.
All right, Bhanvi, thanks for that. SEBI will have to take measures to curb the complex problem of insider trading. That is the word coming in from TK Vishwanathan. Speaking to Jayashri Upadhyay, the former law secretary said that if the recommendations to enhance surveillance do not work, there can be more drastic measures in store. Listen in.
How else you can get hold of the insider trading? It's a very complex problem. We could not, SEBI has to deal with that problem. So we have to, somehow we have to corner them. That's the only way we can do that. See, I think, in practice we'll know how it works. Otherwise, we are totally helpless in dealing with this problem of insider trading. We have suggested surveillance, this and that. But we have moved very cautiously. We have not suggested anything drastic. Incrementally, we are moving, and let us see whether SEBI in the long run will be able to deal with this problem. Otherwise, we'll have to suggest something more drastic. But we have moved very cautiously.
But so you also highlighted the fact that SEBI itself is moving in that direction. Yes. So what is the thought process within the regulator that you were able to understand?
No, SEBI wants to do many things, but they're handicapped by lack of powers, regulatory powers. So we are trying to empower them and try to fill up the gaps, because right now even the Supreme Court has said that SEBI has to be more proactive. So we are trying to do that. And the securities market is very fragile, so we have to be very cautious when we deal with the securities market. So let us hope SEBI will be able to carry forward the mandate.
But sir, there is an argument on the fact that investor net worth may not be the right way of looking at the exposure to the derivatives market. Rather, it should be financial awareness.
But anyway, we have given the recommendations. SEBI will take a call. SEBI will take a call. Let us see what stand they take. It's not yet accepted by SEBI yet. Maybe they are meeting. They will take this into account. We have thrown up an idea. Let us see how does it weigh with the SEBI, because it's for them to exercise that power.
All right, let's move on. The biggest ever order win from Allied Solutions has got Wipro back on track, with the tech giant outdoing the Nifty IT index in September so far. It's possibly the only bright spot in what has otherwise been a rather quiet year for Wipro. What's keeping Wipro on a leash, and has that changed now? Agam is here with some analysis of Wipro.
Right, Harsha. So I was actually looking at Wipro on a year-to-date basis, and it's clearly underperformed a lot of its other Nifty 50 IT peers. As you can see, on a year-to-date basis, Wipro has only given us a return of around 3%, whereas it's well over 20% for the other Nifty 50 IT companies. But that picture has changed over the last 10 days, or considering the big order win from Wipro. Now, the reason behind the weakness that we've seen in Wipro on a year-to-date basis is essentially a weaker industry earnings. To a certain extent, this was largely on account of towards its key clients becoming or turning insolvent. Let's not forget, we've also seen a slow ramp up in a lot of its deals in the second half of the previous financial year. And in terms of the risks and challenges that Wipro faces at this point in time, we have seen the healthcare segment, in the US, which remains under stress. And let's not forget there has been restructuring in the India and the Middle East geographies, which is taking a little longer than expected. And of course, margins remain volatile. But what has worked out for Wipro over the last 10 odd days is its largest deal signing with Allied Solutions, and we've seen that come through. And let's not forget, we've seen a systemic improvement in the US BFSI space. The weakening rupee, of course, adds to it some of the tailwinds. In terms of valuations, it has caught up with the rest of its peers, such as Tech Mahindra and HCL Technologies. It still lags Infosys and TCS. But on the whole, at this point in time, analysts still remain relatively bearish on Wipro, with only 17% buys as compared to 33% sells. We're just going to have to wait and watch whether or not there has been a substantial and significant change in its fundamentals, which could lead to upgrades in Wipro at this point in time.
All right, Agam, thanks so much for that. One defensive stock that's had a fabulous year is Sanofi India. The stock has gained nearly 40% to hit record highs. Now, is this just a symptom of the rally in MNC Pharma, or does Sanofi have something more to offer? Darshan Mehta standing by.
Okay, what we've seen is that most of the MNC pharma stocks have rallied significantly, and one of them is Sanofi India is trading up at record highs. Let's see what the counter is doing, and clearly the trend is on the positive side. If you're looking at it on a year-to-date basis, today it's managed to cool off significantly. It is slightly, but it's up almost 62% on a 12-month basis. So that's the big move that's coming in. Now, if you're looking at certain things that are working, and first of all, let's take a look at the company. 74% of the revenues are from the domestic market. 26% is from the export market. Now, if you break up the domestic revenue, within the domestic, branded is 64% and 10% is the institutional or OTC, which probably will come out, the branded is the much more better segment. And even in the branded one, NLEM is the one where there is government interference, that is just 18%. The non-NLEM is close to 46%. So this is what the company does. Basically, there are certain things that work for the company. If you're looking at the financials, from a 1900 crore revenue, they moved to almost 2500 crores. And in the first half, they follow a calendar year. In the first half of the year, they've done 1300 crores. The third quarter is always the strongest for them. So they will be looking to do more than 2600 crores if you annualize this number. Even on the profit front, if you're looking at it, from a profit of 260 crores, they moved to 180 crores just in the first half. And probably they will exceed what they did last year. And even the margins now, from a 17%, they moved to margins of 23%. And with third quarter being extremely strong, those margins will even go up in the second half of the year. Now, there are certain things that work for them. First of all is the diabetes portfolio. It's much ahead of the market because of its flagship drug called Lantus. The other factor is that the market is shifting from human insulin to model insulin, and that will work significantly for them. And these are the key products that they have that is working for them. Even on the institutional and the OTC business, there is significant amount of traction that is seen. They have products across therapies, and they undertook restructuring this year, and that has helped them significantly as far as all their products are concerned.
Sudarshan, what are the benefits and challenges that lie ahead for Sanofi?
Yeah, so basically there are a couple of things that work for Sanofi. First of all, the big thing that works for it is the fact that there is growth in the high margin products that they have. The new launches that they've done are all high margin products. That will work for them. Combiflam is one of their big drugs, and the IC hot relief pain drug that is there. There is significant amount of ramp up that is there that will help them. Better margins due to in-house capability and backward integration, so that benefits them compared to the other peer MNC. Possible price hike for products outside the NLEMs. They have a significant chunk which are outside them, and that a possible price hike, and new products and extension of the current portfolio works for them. There are certain risks also associated for them. First of all is that, the other thing is that they are dividend paying company since 2007. Sometimes twice a year they pay dividends, so that is something that works for them. A couple of risks. First of all is there is intensifying competition in the diabetes market. Export mainly to group companies. The parent has sold the company to which Sanofi sells. They have a 5-year contract, but post that they could be shifting, and they have more drugs in the NLEM, which could potentially be a problem for them if the government interferes. Very high return ratios as far as the valuation is concerned, obviously on the higher side being an MNC, but if you compare it with the peers, it's actually risen much less than the peers. It's just grown 40%, while peers like Abbott and Pfizer are up almost 55 to 70%, and valuation among the cheapest MNC stocks that we have currently on an FY19 basis. Analysts are bullish on the counter. If you're looking at it, most of the counters have a buy, but the Bloomberg consensus does indicate a negative 4% return, but overall the traction seems to be on the positive side, and these are some of the factors that have caused the rally in Sanofi.
Darshan, thank you so much for that. Let's move on now. China will head to the World Trade Organization of the WTO to seek permission to retaliate against the United States. This after the US failed to comply with the ruling that deemed some of its anti-dumping rules illegal. Kevin Shirili of Bloomberg News reports.
Well, two things. First and foremost, President Trump criticizing the World Trade Organization in that exclusive interview with Bloomberg News just a couple of weeks ago with John Micklethwaite, in which he said that the World Trade Organization was something that he really would take a look at. He was criticizing it. But the second point that I would make is that you're seeing China go to the WTO. You've also seen the European Union and European nations also draw towards the World Trade Organization. That seems to be the type of leverage that these countries argue that they have, particularly as the president is threatening $200 billion worth of additional tariffs against the Chinese. But the last point that I would make is that if you go into states like Ohio, Wisconsin, Michigan, Pennsylvania, and you talk to members of unions, the 40 or 70,000 voters who voted for previous President Obama and crossed over and voted for President Trump, many of the Republican pollsters and even some Democratic pollsters that I speak with argue that the issue of trade and trade deals works well for this administration as they attempt to try to get folks to the polls in the midterm elections. Because while many Republican lawmakers are concerned about the back and forth with China, their constituents aren't as concerned. NAFTA is something that folks on the left have criticized, for example, as well as on the right.
Corporate India is not as charitable as the government wants it to be. Nearly 20% of Nifty companies failed to meet their corporate social responsibility mandate in FY18. Data compiled by Bloomberg Quint shows that even those who did spend on CSR actually spent less than the previous year. Somit Sarkar is standing by with the data. Somit.
So if you see in financial year 2018, nearly 1/5 of the Nifty 50 companies failed to meet the corporate social responsibility norms stated by the Companies Act. Now, according to the Companies Act 2013, any company with a net worth of more than 500 crore rupees, a turnover of more than 500 crore rupees, or a net profit of more than 5 crore rupees has to spend at least 2% of its average net profit in the last 3 financial years on corporate social responsibility. So first, let's see those companies who have spent more than the prescribed norm. Now, if you see in financial year 2018, Vedanta spent nearly 9.6% of its average net profit in the last 3 financial years on CSR. Now in FY17, there was an average net loss, so the percentage could not be calculated. But in this financial year also, the company had spent close to 48 crore rupees on CSR, which was higher than what it did in financial year 2018. Now UPL spent around 6.9%, which was lower than what it did in the last financial year, that was around 9.7%, while Coal India spent only 1/3 of what it did in financial year 2017. Now in 2017, it spent around 18.7% of its average net profit on CSR, while in FY18, it spent only 6.2%. Lastly, Grasim and GAIL, if you see, they spent around 2.7% and 2.6% of their average net profit on CSR. Now, 2 companies that stood out in FY18, first Sun Pharma, second Tata Motors. Now, both these companies spent on CSR in FY18 despite having average losses. Now, let's see those companies that did not meet this CSR norm. Now, if you see Bharti Airtel, Lupin, IndusInd Bank and Kotak Mahindra Bank, all these 4 companies have not met the CSR norms for the last 4 financial years, that is from FY15 to FY18. And Zee Entertainment failed to meet the CSR norm in FY18. In FY18, it spent around 0.5% on CSR, while in FY17, it had spent close to 2.1%. Bharti Airtel was the lowest with around 0.2% in FY18 as compared to 0.9% in FY17. And for telecom side, if you see, it was not only Bharti Airtel but also its subsidiary Bharti Infratel that failed to meet the CSR norms for the last 4 financial years.
Soumya, thank you for that. It's an important story. Apple, meanwhile, kicks off this year's bounty, and this could be quite a plentiful this time. The tech giant is expected to announce 3 new models of the iPhone at today's event. Here's what you need to know.
There's no disputing the hype that surrounds an Apple product launch. And last year, anticipation reached a fever pitch as Tim Cook stepped onto the stage at the Steve Jobs Theater to unveil the iPhone X.
iPhone 10. It is the biggest leap forward since the original iPhone.
It was touted as the most significant upgrade in the iPhone's 10-year history.
The incredible new design, Face ID, true depth camera system, and more powerful technologies than we've ever put in an iPhone before.
So, how will this year's event compete? Well, the iPhone X is here to stay, mostly. We expect 3 new models that will look and act like the iPhone from last year. The first will be the iPhone XS, and it'll come with a faster processor and upgraded camera. There will also be a large screen version of that iPhone that is expected to come with the name iPhone XS Max. And then there's a low-cost version. It'll be a little bit bigger than the iPhone XS, but have a cheaper LCD screen instead of OLED. While the phones are significant to Apple's bottom line, don't expect to see any major breakthrough features. Those will come next year. But Apple hopes that these new phones will appeal to a greater array of consumers and in turn boost sales of accessories and services like streaming music and video and get the company a step closer to becoming the first publicly traded $2 trillion company.
Watch out for the new phones today. Out of time on the show. Thank you so much for joining us.
Lots more on Bloomberg. Quinn, stay tuned.
Good news, guys. Got a promotion and a damn good raise.
Congrats, beta.
Congrats, मेरी तरफ से भी.
From mama too.
वाह, raise? अब तो इंश्योरेंस पॉलिसी ले ले.
इंश्योरेंस? कौन सी कंपनी से लूं?
सोचना क्या? चूज वही जिस पर हो